Hi guys, welcome back to Pristine Gaze. So today we'll be looking at a very promising and an emerging player in the payment processing industry called USIO Inc, trading under the ticker name USIO on the NASDAQ stock market. So this company essentially provides payment facilitation and payment processing devices to multiple businesses, merchants and consumers. And let's just start by taking a look at the company's financials. So we'll just briefly go through the company's revenue and earnings track record over the past 5 to 7 years to get a brief idea of what developments the company has made in terms of its financials or profitability or earnings progress. So as you can see, and as is the case with most penny stocks, this company has been in a loss-making state over the past 5 to 7 years, primarily owing to its research and development efforts in producing a promising tech device in the payment solution industry, which actually has a promising future growth prospect. So the company has historically been in a loss-making state, but if you see, you'll notice over the past couple of quarters, the company has, over the last few quarters of 2023, the company has been able to significantly reduce its losses, and the company actually broke through to profitability during the second quarter of 2024, where the company generated a modest net income of around $75,000. Not much, but it was definitely a major progress for the company. And as we can see, during the third quarter of 2024, the company has actually generated a very stable net income of almost $3 million while generating a revenue of around $21 million. So this kind of marks the company's financial growth trajectory over the past year alone, and the company has actually achieved a significant turnaround during 2024, and this was a primary driving factor towards the company's growth. We actually identified this stock back when it was trading at around $1.40 or $1.60 or something around that price range, and a key factor that supported the company's breakthrough to stable profitability at least, was the fact that the company became profitable during the second quarter of 2024. And assuming sustained revenue growth based on the industry growth prospects of the payment processing industry, you can assume that the company would be able to generate a much better earnings record during the third quarter of 2024, as was the estimate of most market analysts. And the company has actually been able to generate a solid net income during the third quarter, which was a primary driver of its recent rally, which actually provided us a return of somewhere around 40 to 50%. And the company's future growth prospects actually remain very strong. So rest assured, the company does have some growth catalysts to continue its drive into the future. And let's just take a brief look at the company's revenue growth since 2017. As you can see in this chart on the company's investor presentation, the company's CAGR has been somewhere around low double digits to high double digits over the past 5 to 7 years, and this is regarding the revenue growth alone, which combined with its recent margin improvements has been a major development for the company. And with the payment processing industry also expected to grow at a CAGR of around 9 to 10% in over the next decade or so, we can assume that this company will sustain this current growth trajectory in the future. So let's go through the company's valuations for a brief bit. And since the company has only recently been profitable, the PE ratio can give us an idea, but the PE ratio would be a much more accurate representation of its valuation prospects to the shareholders. So as you can see on this chart, the company in this table, the company has actually seen a reduction in its price to sales ratio from a range of around 1.28x or 1.48x in the previous years to 0.75x at present. And It was actually at its lows of around 0.42x over the past year, which was actually a very strong investment opportunity again. But still, the price to sales ratio of 0.75x is both good on a standalone basis as well as compared to the industry standards, while also being improved compared to the historical range of the company itself. Because if you look at the company's track record before 2020 or 2019, it was still ranging around the 0.75 to 0.8x range when the company was still in a loss making state. And the recent profitability actually supports this slight increase in valuation over the past couple of years. And if we take a look at the company's technical charts, you can see that it has recently broken through its short and long term EMAs, which is actually a promising signal of a long term uptrend for the security. And if we compare the company's price over the past few years, it was actually trading somewhere around $8 to $7 back in 2021 and 2022, when the company's financial performances as well as financial growth was significantly poorer. Yet the company's breakthrough to profitability now hasn't yet factored into the stock prices yet, and it still provides a compelling investment opportunity for investors.